Imagine this. You've just put your hard-earned money into Bitcoin. You're excited, even a bit proud, thinking you're on the path to financial freedom. But suddenly, the market crashes, leaving you staring at massive losses. You feel a pit in your stomach, wondering, was it a mistake? Cryptocurrency has brought wealth and financial freedom to many, but it has also led to financial nightmares for some who do not approach it with caution. Do you know why? Investing in Bitcoin and other cryptocurrencies carries significant risks. Today, we're uncovering the top dangers every investor should know before buying Bitcoin or diving deeper into cryptocurrency investment. If you are an investor or planning to invest in cryptocurrencies, this video is for you. Alright, before we dive in, if you're here to invest smarter or interested in making money online, hit that like button and subscribe to our channel. We'll make sure you stay informed and prepared every step of the way. Risk 1. Market volatility. Let's dive into one of Bitcoin's most thrilling and terrifying qualities, its volatility. Bitcoin isn't like a typical investment. One day you might see it surge 20%, filling your heart with excitement, thinking you've made it big. But the very next day, that gain can vanish in a flash, with prices plummeting 30% or even more. These numbers aren't just hypothetical, they're real, and they happen all the time. Unlike traditional stocks or real estate, Bitcoin's price can change within seconds, driven by anything from global news events to a single influential tweet. And while some find this financial roller coaster exhilarating, for others, it's a source of constant stress and fear. Imagine checking your phone and seeing that overnight your savings have dropped by thousands of dollars. For new investors, the experience can be emotionally exhausting. Fear, excitement, greed, panic. It's all part of the Bitcoin journey. Some can handle it, but others find the emotional toll too much to bear. So here's the real question you have to ask yourself. Can you handle this level of uncertainty? Are you okay with watching your money skyrocket one day and plummet the next? This isn't just an investment, it's a mental challenge. You'll need the stamina to hold on during those gut-wrenching drops, and the patience not to cash out too soon in moments of temporary success. Before you jump in, ask yourself if you're ready for the mental strain. The Bitcoin market isn't going to slow down for anyone. It won't pause to let you get comfortable. Once your money's in, it's in, and you're along for the ride, whether you like it or not. And remember, this isn't just about making gains. It's about managing risk and understanding the wild nature of this investment. If you're someone who struggles with anxiety or finds financial losses hard to accept, Bitcoin's volatility could be a brutal experience. But if you're prepared, if you understand that this journey has just as many lows as highs, you might find Bitcoin to be an incredibly rewarding challenge. Just know that every moment of excitement comes with a potential moment of dread. Are you ready for that? Risk 2. Regulatory risks. Now let's face it, Bitcoin isn't your typical asset, and that uniqueness comes with challenges. One of the biggest? Regulatory risks. Bitcoin operates in a legal gray area in many parts of the world, where rules can shift without warning. Governments have the power to restrict, heavily regulate, or even ban the use of Bitcoin entirely. And those changes can impact everything from the way you access your funds to how you interact with financial institutions. Imagine waking up one day, checking your news feed, and seeing that your country has imposed a sudden ban on Bitcoin. Your heart sinks as you realize that your ability to buy, sell, or even hold your Bitcoin has been dramatically limited. In some cases, you may not even have legal access to your own funds. This isn't just theoretical. It's happened multiple times and could happen again. In countries like China, Bitcoin mining and trading were restricted with little warning, sending shockwaves through the market and leaving thousands of investors scrambling to salvage their assets. In India, rumors of bans have created widespread anxiety among crypto holders, with many questioning the safety of their investments. The reality is, Bitcoin's decentralized nature makes it hard for governments to control, and that's exactly why they try to restrict it. It disrupts traditional financial systems, poses challenges to monetary policy, and for some governments, represents a loss of control. So, while the appeal of a currency free from government oversight is strong, that freedom can be risky when the government decides it's a threat. You might be wondering, what can I do to protect myself? The truth is, there's no perfect solution, but staying informed is crucial. Keeping up with crypto news, monitoring legal changes, and even joining online communities can provide early warning signs if regulations in your country are about to shift. Staying proactive can help you act quickly if restrictions loom. Here's a hard truth. Bitcoin regulations aren't just possible, they're probable. Governments around the world are paying close attention to cryptocurrencies, and as their popularity grows, so does the likelihood of regulatory actions. Whether it's stricter reporting requirements, outright bans, or added taxation, these actions could significantly impact your investment. And when it comes to government decisions, it's not about if, it's about when. If you're investing in Bitcoin, always be aware of the legal landscape where you live. Your goal should be to stay one step ahead, understanding that proactive measures are your best defense. Because when governments make a move, it's fast and often leaves little room for investors to react. Remember, Bitcoin is about financial empowerment, but that comes with a responsibility to stay informed and prepared for the unexpected. Regulatory risks are real, and the more aware you are, the more control you'll have over your investments. Risk 3. Cybersecurity threats. If you think that once you buy Bitcoin, it's automatically secure, think again. Bitcoin operates in the digital world, and just like anything online, it's vulnerable to cyber threats. Hacks, scams, and phishing attacks are all too common, and they're growing more sophisticated every day. From fake websites that look just like popular exchanges to malicious apps pretending to be secure wallets, Bitcoin investors face serious cybersecurity risks. And here's the worst part. In the world of cryptocurrency, losing access to your Bitcoin is like losing physical cash. There's no bank to call, no insurance to cover it, and no way to reverse a transaction. Imagine if every time you went to the bank, there was a chance someone could take all your money, and there was nothing you could do about it. That's the reality in crypto. Your Bitcoin is only as safe as the security measures you put in place. So, if you're planning to invest, remember this: security is everything. Protecting your Bitcoin requires more than just a basic understanding of passwords. It demands vigilance, technical savvy, and a strong security mindset. Use reputable wallets, enable two-factor authentication on all accounts, and perhaps most importantly, never, ever share your private keys with anyone. And don't store your Bitcoin on an exchange long-term. Move it to a secure hardware wallet. Think of it as your personal vault, offline and out of reach from online threats. If you're finding the video useful so far, now's a great time to hit that like button and subscribe. That way, you'll always have reliable guidance to navigate through the challenges of Bitcoin and other investments. Stay with us as we build a safer, smarter investment journey together, step by step. Risk 4. Lack of consumer protection. In traditional banking, consumer protection is a given. Lose a credit card? No problem. You can cancel it with a quick call. If a fraudulent transaction occurs, the bank often steps in to reverse it or compensate you for your loss. But in the world of Bitcoin, things are different. Very different. Bitcoin is decentralized, which means it operates without a central authority or regulatory oversight. There's no Bitcoin bank watching over your funds. Once you make a transaction, it's final. If your wallet is compromised or you fall victim to fraud, there's no 1-800 number to call, no customer service representative to help retrieve your lost funds. If your Bitcoin is gone, it's gone. Think about that for a second. Imagine losing access to your entire life savings in a single click with no hope of recovery. In traditional finance, we're used to safety nets. Banks protect us, insurance covers losses, and the law often steps in for fraud. But with Bitcoin, that safety net doesn't exist. It's true financial independence, yes, but it's also true financial responsibility. With Bitcoin, you alone are responsible for safeguarding your funds, securing your wallet, and protecting your private key. Think of your private key as the ultimate password. If someone else gets it, they have total control over your funds, and there's nothing anyone can do to stop them. If you misplace it, lose access to it, or accidentally expose it to hackers, the consequences are irreversible. This isn't just hypothetical. Thousands of Bitcoin investors have lost funds due to common cyber threats like phishing scams, where hackers create fake sites or emails that look nearly identical to trusted platforms. All it takes is one wrong click, one mistyped URL, and suddenly, your funds are in the hands of cyber criminals. And in many cases, these scams go unpunished. Bitcoin transactions are anonymous and irreversible, making it almost impossible to recover lost funds. Before you put a single dollar into Bitcoin, ask yourself if you're ready to take on this responsibility. True financial freedom requires a high level of caution and preparation, and that means treating your Bitcoin with the utmost security and care. Double-check every transaction, use only trusted platforms, and stay vigilant to minimize the risk. Risk 5. Market manipulation. In traditional finance, regulations keep things relatively stable. Stocks, bonds, commodities. There are rules that prevent big players from influencing the market too heavily. But cryptocurrency? It's often referred to as the Wild West of finance, and for good reason. In the crypto world, large investors, known as whales, can manipulate the market in ways that are difficult to trace and nearly impossible to prevent. Imagine this. You buy Bitcoin, the price starts skyrocketing, and you're thrilled. But just as quickly, it crashes. What happened? Often, whales are behind these price swings, buying and selling massive amounts to sway the market in their favor, leaving everyday investors like you in the dust. And this isn't just speculation. There have been documented cases of whales orchestrating pump and dump schemes, where they buy up large amounts of Bitcoin, push the price higher, then sell off, causing the market to plummet. For newcomers, these tactics can be financially devastating. So, how can you protect yourself? While it's tough to avoid manipulation completely, you can stay cautious by avoiding sudden buying or selling urges when prices seem too good to be true. Look out for patterns of extreme price spikes or crashes, and try not to invest based. Remember, knowing how to spot manipulation can save you from becoming a casualty of the Wild West. Approach every investment with caution, and avoid getting caught in the ups and downs orchestrated by those with the power to influence the market. Investing in Bitcoin offers potential, yes, but the risks are real and can be brutal if ignored. Remember, investing is a journey, and the more informed you are, the better prepared you'll be. We're here to guide you through the ups and downs of investing, helping you make decisions with confidence and clarity. Thank you for watching, and stay safe out there. Now, if you found this video helpful and want more insights like this, hit that subscribe button.